What's up, guys? How y'all doing? Hopefully you guys can hear me well. You can see me well also. I think right now it looks decent. So I'm just go here. Oh shit. Put that there. Do you guys want to see the DOM? Let me just pull out the YouTube stream here. What's up, guys? So as you guys know, we're gonna do a giveaway every single time, every single stream. So make sure to like and subscribe. So you guys already know it's around 100. So we'll do 80 for an advanced and 100 for growth. So, oh shit, I didn't even post on Twitter. Damn. Wait, I'll post on Twitter. Let me post on Twitter. But I'm looking for a potential short play here, definitely. If we can start getting back down. Sorry guys, I just have to send that right here. And then it's good. Still didn't take any trades, guys, by the way. Still nothing for me right now. What's up? What's up? What's up, man? New to the channel, but follow you on X. I like your trading style, man. How long have you been trading? Been trading for around 3 years now. The first year I didn't take it seriously. So like the first course I ever watched was back in like early 2022, and then took notes and stuff, but was in and out for quite some time, and then I really took it seriously in 2023, full time going in 2023. So yeah. Wait, I can put the screen here so you guys can see it a little bit. And put the cam like this. So you guys see the screen a little bit, which I'm looking at on the left. So I can put, do you guys want me to put the DOM and actually like, because I can put all my accounts on the left. Wait, I can put that there. I don't know if it's going to be a little bit weird or not. Let me see. What's this? Okay, so it's this one. No, it's not trading view. Damn. Okay, yeah. Okay, so this. Serious? I can't. For some reason, I can't put it behind. Yo, for some reason it lags a little bit. My OBS is cooked. My OBS looks cooked right now. Not gonna lie. Alright. What's up, guys? What's up? Does my mic sound good? Let me see if my mic is good. Alright, my mic should be good. Alright, let me just try to get the DOM in. Like, what is that? I want to get the DOM in here. So, there we go. There we go. Do you guys want to see that or not? Be completely honest. I think it's nice just to see like my accounts. And like if I enter all my accounts, you know, it moves a little bit. Let me know. Do you guys enjoy that? Or it's kind of lame. That's usually what I look at though. Yeah, you're gonna be able to see my positions from here. No, no, no. Yo, chill out. Only P&L? Alright. I can do that. Where should I put it though? I think then I put my face on the right and this right here. That is better, I think. Or just like this. Is my face top right better? Yeah. To be honest, I don't use the DOM on NQ. I don't use the DOM. I just use it to execute sometimes. But I'll keep it like this. I mean, it looks pretty decent like that. My accounts, if I'm in a position, you will be able to see it. So you guys are not gonna say I'm capping. But yeah. What's up, guys? What's up? If you enter on TradingView, the trade will be copied too, or you need to enter. Nah, you need to enter on Tradeify. That's the reason why I have it. If you use Replicanto, which is a trade copier, you can trade immediately on TradingView and it will copy, on the back end through Tradeify. But yeah, I switched like a PC part and it doesn't. I need to rebuy Replicanto, so I'm not down with that, to be honest. Yeah, it's working for, yeah. Like I'm showing this chart, but usually like if I'm not live on YouTube, I just look at the Tradeivate basically. I chart on TradingView, but I execute on Tradeivate because I think you get better feels, and especially when you get out market is like it's better. What's up, Joey? How are you doing? I'm thinking of buying your VIP course. It's not even available. I closed it, and I don't even have a course. Right, as I'm in a trade, I feel nervous. How to control it? Okay, when you're in a trade, you feel nervous. All right, there's possibly two reasons why, in my opinion. It's first, you're possibly trading a size that you're not comfortable losing. So I think you should, scale down a little bit, trade micros, and you'll see that you will not have that nervous feeling when you enter a trade if you risk losing $2-3 or let's say $50 per trade. But if you risk, let's say 500 on an account that has $2,000 of drawdown, everyone would feel the same thing. That's for sure, bro. It's not you, or it's not your psychology. You're over risk, so absolutely you will feel that. You don't need to rebuy Replicanto. Just log in your account and update the machine. To be honest, I tried everything on Replicanto and it didn't work. I actually I would need someone to help me with that though. But I mean, I'm pretty comfortable entering on Tradeivate anyways, because I don't trade anything else than my 550k Lightning accounts with Tradeify. So yeah, pretty much it. So right here, just looking at this price action, I would like to see a reversal from this candle to trade back inside this gap and this order block. So basically what I'm seeing right now is that we formed a bullish for value gap here, right? And if you can find signs of weakness right here from this initial order block at the top of this range, and see us trade back below the open, then we will most likely fill this gap. So that's what I'm looking for right here, framework wise. So the best thing that could happen right now is if we stall here a little bit, push above this high, then break below, retest the breaker, and then we trade back into the gap. That would be my play here. That's what I'm looking at. Still didn't take any trades today and yesterday also. So if that gives you a perspective on the type of trades that I'm taking. Okay, bro, I took 0.5% risk in one. There's two reasons why you could feel nervous. First, your strategy, you don't have enough data on your strategy, so you feel like you're gambling. Or second, you're over risked. So it's one of those, usually. For me, I felt a lot of let's say stress when I entered a trade before, because I didn't know if my strategy was actually profitable or not. But when I had the hard proofs behind, then I started to feel less nervous, and I was like, whatever happens, happens. Oh shit, it doesn't even show the price tags, my fault. Wait. Alright. My bad. Mm. Well, that's why people put their face bottom left. I just understand. I understood it right now. That's why people put their face bottom left. Mm. Damn. You see the price tag. Yeah. I have the group trading on Tradeify. That's what I do, basically. That's what I use. Right now, I would like if we can hold this to create a new high, then draw back down to break below this breaker, and then use this as my resistance for this internal gap. So let's say if I go on a 5-minute chart, I would like to see this 5-minute gap hold, create a new high, then us trading back down. That's what I want to see. When giveaway, yeah, by the way, guys, I'm doing a giveaway. Every stream, I'm doing a giveaway. But for us to do this giveaway, I need around bare minimum 80 likes. So 80 likes. What the fuck? 67? Nah. Nah. That shit is weird. 67 likes and I started the stream 16 minutes ago. Can you bot likes? Because sometimes I go back into the streams and I like 30 or 40 likes disappear. So I need some explanations. But yeah. So we'll do, you know what? We'll do 100 likes and we'll do a giveaway. All right. Usually in a month, like I would give away around like 12 accounts. So if you're on every stream, like you have some chances of winning 4 straight to funded accounts, so lightning accounts, 4 advanced, and 4 growth. It's like so now I would like to see us break above this high and then draw back down. That's the play here. The people that didn't win take away their likes. Yeah, possibly. Bro, if you do that though, you're a pussy, bro. I'm not gonna lie. If you take away your likes just because you didn't win, bro, come on, bro. Like, come on. Huge giveaway? I did a huge giveaway, but it was nice. But it's better to split the giveaways through a lot of streams, in my opinion. Like making a huge stream with a big giveaway, like you're giving away your accounts to people that are not even like part of your community in a sense, you know. Someone could win just because he saw the post on Twitter. When let's say you guys that come in my stream every single day, or let's say every single time I stream, then I would like to give you guys the accounts rather than people that, you know, are not really part of my community, to be completely honest. If we make a new high right now, won't you be in for a long... No. I'm looking for shorts, I said. Back into this gap. Looking for shorts. Into this gap and into this unfilled breaker. That's like areas where we have a lot of buyers waiting to get filled like this. So price would be attracted to draw back towards those levels, but we will get a scalp down towards this level. We're not going to predict that this level will hold in order to create a new high. we're going to trade back into this zone because we know there's a lot of orders here and it acts like a magnet. So that's another way you can approach things, not necessarily always waiting for the gap to get filled before taking a setup or predicting that the gap will hold. You can just put yourself in a position where you trade back into a zone that has a lot of chances of being filled. When you came first in Tradeify, then I joined. Oh, first time, okay. Yeah, that's cool. If there's some people from Tradeify TV, that's cool. Appreciate y'all. Definitely looking for shorts. So this is exactly what I wanted to see. New high. And then right now, I want to see price holding this high, breaking below this breaker. Exactly here. And that will be, in my opinion, a high probability breaker block right there. Okay. Back into this for 15-minute unfilled fair value gap. So we have quite some times. But yeah, I have idea for you. Why not you gave 10 accounts each 10k instead of 100k? There's no there's no 10k accounts or 5k accounts. The only accounts that we have on Tradeify are 50ks, 100ks, or 150ks. So it's impossible for me to give a 5k account. What's up, Nix? How are you doing, bro? Appreciate you for the sub, bro. You're killing it. Also, I see you on Twitter. How long do you need to be profitable? It's depending on you, how much work you're able to put in. I'm doing great, bro. My opinion, to be profitable, it doesn't require you to be let's say it doesn't take 5 years or like 4 years, 3 years. It's depending on how much focus you can put on, and like in a span of like a year and a half, 2 years. If you have 12 hours a day to put in this craft, you will most likely succeed if you have the right approach. We didn't get the squeeze that I wanted here, so we'll look for it after that. So on the next candle, we still have this gap being created, so we'll see. So we'll use a new breaker, but the framework is still in play, in my opinion, especially if we hit this rejection block. With this rejection block, that would be a good PDR rate to play a reversal back down towards an unfilled gap. So basically what I'm looking for here, like a lot of people are going to try to like top tick this rejection block and then, trade back down. But what you want to see though for me is this candle closing, brand new candle opens, drives up, okay? So accumulation, manipulation, and then when this candle will flip below the open, it will create a breaker, an order block possibly, and a gap. So then I have my target below me, I have my key level, I have 3 PD arrays with me that got created, and then I'll scalp my way down towards an unfilled gap, which is my target. So that's basically like the whole steps behind why I would take this trade, not necessarily just from, let's say, tapping this level. This level is subjective, key levels are super subjective. Like most people cannot tell you the reason why this level held when another level was exactly the same and didn't hold. So it's just you use them as a reason to enter basically. But you see here, if I have this key level and I'm like, all right, the new candle is going to open up right here. If it drives up first, so this candle will look bullish, sweep the previous candle's high and tap into this rejection block, then flip below the open, this candle will become bearish basically. And if it becomes bearish, it means that there's a lot of sellers inside this candle. So then I will try to, you know, scalp my way down towards a level that acts like a magnet, which is right here. Bro, 93 likes and we have 80 people here, bro. Yeah, y'all are insane. There's some people who bought some likes. I mean, love the haircut. Appreciate you, bro. I had bro, the haircut. I needed a new haircut because my last haircut was just I looked too young. I looked way too young. And I feel like if you don't show your forehead, it looks like you're antisocial a little bit. Like people will not approach you as easily if you have your whole forehead covered up. In my opinion, it's just a psychology thing. Ask them to introduce these new types of accounts. They may listen to you. By the way, it's a great marketing strategy. Bro, I don't have that type of motion, bro. I can't influence the CEO of Tradeify to bring 5K accounts. And I mean, bro, yeah, I mean, I don't think it will happen. I love your energy, Amal. Stay smile. I appreciate you, bro. I will keep smiling, trust. A rejection block is when you have that 2 candle pattern, basically on the higher time frame, and you have basically you take the opening price of the level that got rejected. So let's say you have a level right here. Okay, those wicks are called rejection blocks because this is the area that will act as support. Basically, this is just support and a resistance. It's you take the opening prices of areas on the higher time frame that rejected. So let's say here, this would be a rejection block. There's not any like real big explanation behind a rejection block rather than support and a resistance. Really, like this would be a rejection block right here. You see, we pull back towards it and then we hold it. It's just a fancy word to call a support or resistance level. No, and those levels are strong. So right now, you know, price could go back down to fill this 15-minute gap right here. But if it doesn't sweep the previous candle's high, I don't want to take this because this would be like low-hanging fruit for buys once we tap into this gap. I don't want to see this. I want to see us sweep that previous candle's high first because this is a liquidity pool that is important to me. What's your average R return from the last couple months? It depends. It's depending because I upped my size this month. Not this month, but starting from June, I went for 150K accounts rather than 50K. So my size almost tripled. So in terms of Rs, I usually try to go for 5 to 6 Rs per month. I try to go for 5-6 Rs per month because I think trying to, you know, swing for the fences every time is not something that is consistent in every market conditions. You know, for me, you know, I want to see consistency. I want to see me win more than I lose. And yeah, that's basically it. For this potential structure, are you talking in consideration of the 4-hour structure. No, I'm talking about the 15-minute. I'm on the 15-minute chart. You guys can see it right here on top left. I'm on the 15, and I would usually do my analysis on a 15-minute chart if I want to scalp on the lower time frames for like 5 to 10 points. Is that Eurus on Discord your is that in Eurus on your Discord? Yeah, it's in Eurus, but it's not mine. It's not mine. I just never changed my profile picture on Discord. Bro bought a model instead. No. I don't got that. I don't got that in me, bro. What tips do you have when you move from 50K to 150K? That's a good question. For me, it's not really about the size. The size is not going to make you uncomfortable. It's your life situation that will make you uncomfortable trading those accounts. Since 150K accounts are more expensive than 50K accounts, then you can feel the stress of losing those accounts and not being able to pay, let's say, for those accounts back. So before you take the steps of increasing your size or increasing your initial investment with prop firms, make sure you are in a financial situation that, you know, will let you handle those losses pretty well. You know, in my opinion, most people are stressed because if they lose those accounts, it will hurt them financially in real life, and they will possibly not be able to get those accounts back, or, you know, it will really hurt them to get those accounts back. So yeah, that's really about scaling. Scaling is the hardest thing in trading for sure, but the more capital you make, okay, the better your life becomes, and then you will have then you could scale easily. It's really hard to scale if your life situation didn't change, of course. It's like if you still take the bus every single day, and you know, it's hard in some sort to invest $3,000 into prop firm accounts, knowing that if you lose that $3,000, then you're cooked. You're not gonna pay for your bills, or, you know, it's really I would say trading has a lot to do with the charts, but has a lot to do outside of the charts also. Definitely. But yeah, but that's a good question. But for me, it wasn't a big change really, because I was trading 50Ks, more than 550Ks every single month anyways, so my size was bigger than what you guys see on Twitter anyways. I got you, my G. I would say it's my guy. And then, yeah, I would say it's my guy. Got you, my guy. What hour is that? 20. We could see a potential reversal from that, actually. If this 5-minute holds, we could have a second distribution back down. It wouldn't be based on the 15 though, but I switch from Forex to futures. Tips you have for me? Yeah, I would say you're in a market that is pretty similar, which means that Forex and futures are markets that are hard to trade and hard to find an edge in. All right, they're markets dominated by algorithms and banks and big institutions, so make sure that you practice a lot. Make sure that you take daily notes, know exactly what you're doing before you put risk on. That's my tip on that. So it's not necessarily a big difference. I think NQ, it's depending on your edge for sure, but I think NQ is quite volatile, so you can find good strategies on that pair for sure. But make sure to know exactly what you're doing before putting on risk. That's for sure. That's pretty good here, what we're seeing. I like that. I definitely like that. Definitely like that. I got funded 50K yesterday. How do you control emotions when live? Trade light size. The lighter you trade, the more losses you can handle. And yeah, don't even think about you making that kind of money. Or, I think a lot of the big problems in trading is because people sell the dream. If you sell the dream of, if you're being sold the dream that you're going to make 100K per month in 6 months, it's unrealistic. So then you rush the process and you start, entering into oversized trades, and you don't follow your plan as soon as you hit 3 losses in a row, etc., etc. Take things slow and steady. Average, start by paying your bills with trading. Start by averaging 1K per month, because that 1K, you're gonna take the same trades than when you're gonna start making 10 or 15. So it's just about the trades. That's really what's important. So the tip is take things slow, super slow, and don't think you're going to change your life with that funded account. That's really the worst advice, or the worst things I've ever saw on Twitter is one funded account can change your life. I'm like, bro, chill. Like, it will not change your life. Most likely not. But when you're going to get good, it's like a compounding effect. It can change your life, but it's not that one that you think. It's respecting your rules every single day, and then one day you'll be able to scale and make the difference. 15-minute for value gap model. Right now I'm not looking exactly to trade that, to be completely honest, but you guys could for sure. That's the YouTube model. So on this 2, let me see, 3, yeah, you could take this trade for sure. I will look for this for value gap to hold, though, to create a new low. So then that would be, my second distribution trade. So right now you have a breaker. So as you can see right here, I created an order block on the 5. So if we were truly bullish, we should have respected that order block to create a new high. But then what happened was that we disrespected it. So now I want to see this order block hold in order to create a new low. Then I will have an order block paired with a breaker that can be retested, and hopefully for value gap, then the chances are we will most likely break the most recent low for a 1-to-1 risk to reward ratio. That's what I'm looking for, actually. So now I'm not predicting right now. I'm just gonna react to what price is doing. If it starts pushing up, I'm gonna wait. If if it goes down, though, this is when I'll look to pull the trigger. What's up, Jacob? How are y'all doing? Victor, what's up, guys? Yeah, I think it's really this problem. It's like it was this problem for me for a long time. It's like I had a 50K account, and if I took 3 losses in a row, I was like, damn, I've been trading this account for a while now and I didn't get paid. You know what? I'm just gonna try to go risk on here and see if I can get paid. If not, then I'll just retry it again. But it never works for sure. It's never that easy. Amos, this week I'm trading your models. Nice. Yeah, I gave out some models on my Discord. For free, guys. I'm not gonna make you pay for those. That's for sure. So there is 3 models on that I gave out on my Discord. If you want to check it out, completely free, guys. You don't need to pay. No need to pay for information that is already available on YouTube. But what I ask you to do when you see those, when you take a look at those models, though, is make sure you put your own sauce. Like, make sure you grind those models and find your own ways with it. It's not necessarily models that can't be refined. They definitely can be refined. The framework overall, let's say, of some models are so good and possibly better than others. 102 likes. It's time for the giveaway. Nah, bro. Chill out. I'm gonna do the giveaway. Don't get me wrong. I will do it. We'll definitely do the giveaway, but let me take a trade before, man. Yeah, bro wants to win so bad. Listen, the only way you're gonna win is if you don't want to win. That's how life works. It's like, if you're like, please give me this account, your energy is a lack, okay? You don't want to give out this energy before a giveaway, right? You want to have abundance. You want to be like, you know what? I don't need this. I'm good in my life. And then, oh my God, you won the giveaway. Holy shit. Have the right energy, right? You can't attract things in your life by forcing them. So I'm waiting for this low to get broken. So I want to see this breaker hold on this 5. You see, for the second distribution, I want to see us break down below this low right here, and then I will look for potential shorts. This would be an A+ setup. I would definitely enter my full size with a smile on. Definitely. That's what happened to me last time. Yeah, if you're like, I'm never gonna win this, you're gonna win it. I'm telling you. You gotta detach yourself. That's a lot in trading also. It's like, if you want to get the payout so much, subconsciously, your mind will do everything to self-sabotage you because you're forcing something that isn't meant to happen right now. But if you're like, all right, I'm just gonna trade and I'll take what the market gives me this month. If it's $2,000, I'll take it. If it's minus 1,000, I'll take it. Then, if you truly have a good system, you're putting yourself in a position to get a payout for sure. But it's not accepting your faith and what the market had for you on that day or on that month that will make you blow accounts. We got the breaker. I need us to close below this low though. I want to see us hold this breaker and not do like double bottoms here. I want to see us break below this low, second distribution. Then I'm gonna get in here to break the new low. 100%. Amos, if you knew that price would act as a magnet there, how come you didn't take that short? Really good question. Is because I have rules, strict rules that I respect in order to take those kind of setups. For me, like I said here, I wanted to see this high get swept. I wanted to see this 15-minute high being taken out to have enough fuel to go back down, because usually this is where you lose some win rate. If you try to short before this candle's high gets taken out, then you're gonna find a buyer inside this candle to create a new high, and then you're gonna get faked out, stopped out, and then the real move is gonna happen. In my data, I have the hard proofs behind why I shouldn't take those. So this is why I didn't take it. If I had it though, I would have taken that. That's for sure. But it's not because you know where price is most likely gonna go that it meets all your requirements, and you know you need to stab the trade. Right here, I rather stay patient and wait, you know, and stay cash, not even put on any risk, than losing on a trade that I know my data showed me that was, you know, that my trade was a lower probability trade overall. So here, really good. I really like that setup right here. You see, like, I was able to know that once we created this 15-minute fair value gap, if we found signs of weakness at those highs, we could trade back into this gap for sure. But like I said, I didn't have this rule met. So now I'm going into another setup, which is, you know, the second distribution of that move. So if I can get it, I'll happily enter. Awesome explanation, but look at where price rejected from. Clear IVG respect reject, yeah, for sure. But right here is just, you can't take an entry signal as a framework to know where price is gonna go. This is just an entry signal. If you take all those entry signals every time, you will have a negative expected value in the long run. You will lose money in the market if you just take this on the 1 minute chart, because the correlation between the 1 minute chart and what price is actually pulling towards or actually wants to go has nothing to do necessarily with the 1 minute chart. It has to do with higher time frame candles and, you know, your framework overall on how to read price. If you don't know where price is pulling towards, then your entry model could be a fake out, you know. So that's why I don't take, you know, random inversions anywhere, you know, on the chart. It will, you know, you can get lucky with those for sure. But one thing that I know in trading is that the more you trade, the less lucky you get. So if there is no edge in what you trade, sooner or later you will give that money back to the market. It will snatch it back from you. So I'd rather stay cash, rather stay out of those. That's the mindset. You gotta be so humble, because like it's a risk on game, man. If you don't know exactly what you're doing when you're entering, it's like this market is comparable to going, like, I wouldn't say this, but it's comparable to a high level sport. It's like the people that you're exchanging contracts with, it's either an algorithm that was built by humans that are super smart, or, you know, traders that are super smart and have been doing this for a long time. So you can't cheat this game, really. It's like you doing a 1v1 against a basketball player. You will get cooked if you don't practice. Like, and the chances are you will still get cooked, you know. Or I would say boxing, because it's one-on-one. But looks like price may be accumulating to manipulate down to distribute up as we're in this 15-minute fair value gap. It definitely could. I'm not here right now to predict though. I want to stay, I want to see if we can hold below this line though. If we can hold this right here, start creating new lows, then that would be good for me. Depends. I could completely shift my my focus if we start trading back above this high though. If we start trading back above this high, I would look for a scalp back long. But if we hold this right here, create a new low again, I would wait for the pullback. But I don't like when we reject those lows here. I don't want to see strong acceptance below lows. I know it could definitely still go down from now. It's not a bad timing. But I'm gonna stay cash here for now. Man, 125. Holy. Appreciate y'all so much. I'll do a giveaway, guys. So make sure to stay tuned. I will try to take a trade before that though. That's for sure. I'm gonna lock in a trade. The ES and NQ is completely different. What's the time you decide to close out for the day? I would say around 3 p.m. I'm done. I'm usually done at 3 p.m. Trump is speaking. We'll see. My backtesting, I didn't take into account that Trump was gonna speak or Powell was speaking or this or that. So, that's why I still take the trades regardless. I really don't care. But yeah, of course it could be a reason why, let's say, I would lose the trade. If he says something that is against my strategy, then I'm cooked. But I'm uh I'm gonna accept the risk though. I don't care. Well, for sure, like let's say like you're one trade away from the payout. I would definitely say to myself, all right, you know what? It's better to not take the risk of trading when Trump says something. You could get slipped, or something weird can happen. So it's an unnecessary risk. Let's say in terms of business decisions, because I see prop firms as a business compared to you trading live, because you have revenue that the firm pays you. You have the cost of the accounts, etc., etc. So it's in terms of business decisions, I think staying out if you're one trade away from the payout is not a bad decision. 100%. But it's a decision based on your intuition. It could work out, or let's say it could fail, and then you would lose. Let's say it could work out, and you passed on it, and then you lose 3 trades in a row. So you're like, damn, why did I take that into account? I would have got the payout. So. Did you keep a journal during backtesting, and how many hours a day did you backtest when you were learning? Really good question. That's basically what my whole. Let me just see here if we can close below. All right, but I'm gonna respond. So I did journal all my backtests. I think it's super important. Taking notes of your trades and know exactly the reason why you lost on that trade and how you can um understand the setup better. Super, super important in my opinion. And yeah, so I did backtest a lot and did journal my backtest a lot in the past. And it was depending on the times. I wasn't backtesting, 15 hours a day every day. There was days, it was like 3 month periods. I would backtest, let's say, 5 hours a day, and then another, let's say, 3 months after, I would backtest 8, depending. Um, when I felt that I needed to backtest, and I wasn't at the level that I wanted because my forward testing wasn't working as well, then definitely was backtesting more. I like this breaker though. I like this breaker, but I don't like the way that it closed. I really don't like the way that it closed. I still have quite some chances of going up, but I don't like the way that it closed, definitely. I would have liked to see a breaker form here rather than this OB, not this OB, but this perfect sweep. Yeah, I'll pass on that, to be honest. I'll pass on that. I don't like those perfect sweeps scenarios. But we could go, we could definitely go higher from here. That would have been my play. I wanted to take shorts in the first place, but then we started to pump really aggressively. I could have found a nice setup back into that upper portion, but didn't like the close of this candle for sure. I hate it. Same thing happened yesterday and I stayed out, so look for a better setup. It's like basically the setup that I was looking for. You see here, it's like we have the breaker and you see we almost had the order block. Like we had the order block, but we almost had the breaker. So you see this high, I want to see a strong candle closure above it to scalp the most recent high. But then right here, what happened was that we wicked back down. So I can't really trust the fact that this breaker has a lot of, you know, trapped sellers in it. So I'll pass. One thing I can note though, right here as you guys see, let's say I go on this 30-minute chart, the brand new candle opened, okay, the new 30-minute candle opened and it has no upwick. What does that mean? It's not something that happens a lot in the futures market usually. Here it happened, but like it's pretty weird. Like when this happens, usually what we see is that price holds and then trades back towards the opening price of that candle to just pop it. Well, let's say if I go on this 30-minute chart, if I go here, like there is almost no candles in this whole price action that has no upwick or no downwick. It's really, really rare. Knowing this, let's say the sweep back here to see price trading back towards the opening is a really good play. Does that happen a lot? Not really. It doesn't happen. I would say like in terms of like frequency of trades, it's really rare to see that. New 4-hour open. Yeah, I could be putting in the down wick of that 4-hour, the bottom. Yeah. But the thing is like, do you actually put the bottom wick so quick? Depending. It's like, it's not necessarily going to be open, low, flip, and then it starts pushing up. Sometimes it's a open, low, fake out, distribution, fake out, boom. And then like it was hard to read. So you got faked out here. Let's say you can get faked out 2 times, 3 times before the real move happens. Especially if you play the 4-hour power of 3. That's why I like the 15-minute power of 3 way more than, you know, the 4-hour power of 3, because you have the less chances of being swept, you know? It's not less chances, it's just you're playing with a candle that has such a lower time frame that the structure is easier to read. If you look at a 4-hour chart, there's a 4-hour time window and anything can happen inside that 4-hour time window. It's really hard to predict the highs and the lows of that candle looking at a 4-hour chart. That's why, like, let's say the people that try to catch whole daily distributions, it's really hard to catch, you know, the upwick or the downwick of a daily candle. It's like usually it gets put in on London session, and if you're not trading this and you're trying to catch it during New York, you're most likely trying to buy the bottom. You're like, yeah, you're trying to buy when price is distributing down. That's usually what ICT traders keep doing. They try to reverse the market every single time at 9:30, when in reality, the upwick of that daily candle could easily get put in London session. You see what I mean? So, but yeah, I would say like in terms of concepts, of course, the power of three is by far the best concept you can ever get into, for sure. I had one concept to really I had one concept to really put my whole energy towards, it would be understanding power of three, for sure. Power of three like gives you a whole, like, the right perspective about price. And if some people don't understand what's the power of three, the power of three is just understanding a higher time frame candle. It's understanding that the statistics behind a bullish candle. So let's say you take a look at a bullish candle, right? It could be a 1 minute, 5 minute, or 15-minute chart. Okay, if you take a look at this bullish candle right here, then if you dig deep enough into this concept, what you will understand is that price on a bullish candle like this, let's say you're looking at a 15-minute chart, price usually creates the bottom wick. So it usually opens and creates the bottom wick of that bullish candle first. If you understand that, that is what we call edge. If you understand the timing, so there's the Y here, so the price, and there is X, which is time. And if you don't align both, in my opinion, in this market, you're cooked. It's not a market that has price discovery like the stock market, and is like, it's way harder to find edge in this market than any other markets. So I think if you don't implement time, it's really hard to be profitable. But let's say here on a bullish candle, if you know that price creates its down wick before creating the up wick, because this is what a bullish candle is. It's a open, low, high, and then close. So then what you can ask yourself is that if you can predict one singular candle, it could be on a 5-minute chart, it could be on a 15, it could be a 30. But if you can predict that when you hit a key level, this candle will close out bullish, all right? You have one shot per day. Then you could position yourself either above that opening price when it retraces back here, when that candle flips bullish. There's a lot of opportunities when you understand the power of three. Of course, some people don't like, ICT terms and stuff. I do get it, but don't get into that cult of, oh, it's better than something else, it's better than this strategy or that strategy. For me, I know there's, one thing that I don't play, but if I wasn't trading ICT, I would have definitely played the VWAP for sure. Definitely played the VWAP, because that is a really good indicator, in my opinion, that you can play and understand the edge with that for sure. Can play with it and master it every single day. You take notes and you're like, damn, okay, this is what happened when we hit this, when we hit that, etc. Been following you since April 2024. That's when I locked in. I passed my first funded in June, and I've slowly grown my XFA, and I'm near a payout. Really good job, bro. That's really nice to hear. April 2024. That's when I started posting, actually. Damn. Appreciate you, bro. Came a long way for sure. Definitely came a long way. But I appreciate y'all, man, so much. Do you look for a bias for the day on the next hour since you trade on a lower time frame? No. You see, like, for me, the daily chart is too high for me to, it's too subjective. It doesn't mean that we are bullish, let's say on a day, and I have a bullish bias, that I will not take a short, So the daily chart for me isn't something that I look at really. The highest time frame that we'll look at is the 4-hour, and it's at a really specific timing on the day. So it would be during 10 a.m. Okay, but you guys already all know this, like the H4 power of 3. I don't play exactly like most people, but yeah, that would be the only time I would look at the 4 hour. But then I really like the 15-minute chart. I think the 15-minute chart is so good, so good intraday to be able to read. All right, on the 15-minute chart, you can easily mark out the areas where price is most likely going to reverse. It's easily the best time frame to mark out buy side, sell side, internal gaps. So here, let's say my buy side, my sell side. Taking a look at those fair value gaps, who's in control on this 15-minute chart. My job is to scalp 10-15 handles every day. That's my whole job. That's the only thing I want. I want to scalp. If I can scalp 10 handles every single day consistently for the rest of my life, I'm happy. That's it. I'm not here to forecast, or I'm not here to show that I can top tick or bottom tick, or know exactly where price is going to reverse. This is just ego. You live in the 3D world. Drop that ego and just go for something that is repeatable and that actually works. You have 700 followers on Twitter when I followed you in April. Damn. That's hard. That's hard. Appreciate you, man. So what would be your entry in this case? What would you want to see? Right now? Right now, to be honest, I want to see what's the reaction from this bullish fair value gap. Right now we're digging super deep into it. Like I said, I gave out this information a lot, and even inside my Discord. But usually what I take a look at, if we start digging into the gap aggressively and we don't respect it on the first tap, if we start digging, I want to see this 15-minute candle close. If I see this 15-minute candle close, I will wait for price to open, sweep the previous candles low, and then flip. Then I will be like, all right, buyers are the one controlling the market. Then I will start looking for potential longs back towards a most recent high, a liquidity pool, a buy side liquidity pool. That's basically it for now. That's what my framework would be. But today, like, how I was really surprised that the PPI was so big, and it was clean also. Like, it was bigger than the CPI, which is crazy. CPIs haven't been too aggressive lately. How did you determine that fair value gap? Well, fair value gap is a 3-candle pattern where the up wick of the first candle doesn't touch into the down wick of the third. So like this. 1, 2, 3. I mark out the gap, and then I say to myself, all right, we formed a bullish 15-minute gap. If we're truly bullish, we will respect this gap in order to create a new high. So then I will scale down those lower time frames and see some confirmations of either power of 3 or good confirmation to tell me that the buyers are reactive to that area and are willing to buy price back towards the most recent high or a buy side liquidity pool. That's basically it. My camera is literally there, so I can't see it. But yeah, here you see like we dig super deep into this gap. So I would like to see us hold it if we can. Do you have a high win rate in AM or PM? A higher win rate in AM? I would say I don't have that statistic really. It's depending on the market conditions. Sometimes I will have a higher win rate during AM. Sometimes I don't even have any trades during AM. So usually what I do is that I have like a framework on how to read price and be like, okay, I want to scalp internal gaps. I want to make sure that, okay, this candle closes bullish before I take it, etc. So I have a whole game plan. For me, I have 4 plays. I have 4 main strategies in my playbook, and I play around those depending on the market conditions. I play around those depending on what's the market what's the market showing me right now? Is it better to trade this strategy rather than this one? Is it reactive to the most, like the first fair value gap that's being created, etc., etc.? So I adapt, but usually like I don't. There's not any correlations between my win rate in AM and PM. I think if you just trade AM session, then sometimes you will be forced to take trades that you don't even want to take because you trade in such a small time window. Of course, it's possibly a higher probability time window for some, for some edge, but not for mine. So yeah, looks like this 15-minute maybe inverse. Yeah, it got inversed for sure. So we'll see. Like, to be completely honest, what's happening right now on the higher time frame is not clean at all. We're inside this range. We couldn't get out of this this range here on this 1 hour. So from this candle to, so from this buy side right here to this sell side, can't close above. Like, we're still trading inside this range. So it's a huge accumulation on the higher time frame. We could find scalps internally on, let's say, the 15-minute, but we'll see. We'll definitely see. I don't want to get myself into something that is really really risky at this stage that I am. Amas, can you please explain your understanding of an order block? I've watched multiple interpretations and kind of get confused. All right, listen up, because you will not have to look at a YouTube video if you understand this. All right, what is an order block? An order block is just a break of structure to the downside. Let's say bearish order block, low, high, lower low. Boom. That's your order block. Okay. Bullish order block, high, low, higher high. Order block. What does an order block mean? It means that right here, every single up move for me, okay, I use basically the market auction theory so you guys can understand the reason why price moves. All right, you can think price is being moved by an algorithm, or buying and selling pressure, but I will use buying and selling pressure so you guys understand better. All right, what's happening inside this move is that if price goes up, aggressive buyers are controlling the market. If price goes down, it means that the sellers push price down and try to defend their position. All right, so what happened here? Buyers, buyers, buyers. Sellers try to defend their position. Buyers, buyers, buyers. What happens here is that those sellers right here are trapped. They are trapped into this small box. So what is happening is that if there is sellers that are being trapped inside this box, it means that they were shorting the market while buyers were the one, being aggressive. So they are currently in a drawdown. If they're in a drawdown, what will they do? If they're big participants in the market, what they will do is that they will start selling a shit ton of shares back to where they initially started the shorts. Okay, so they will sell right here to go back towards their break-even spot, and when they're at break-even, they will click on buy to get out. Okay, so this is called covering. So what does that mean? It means that this zone, okay, since it's a covering area, this zone should hold if we are truly bullish to create a new high. This is the only thing that an order block actually means. So you don't need to understand all that covering stuff, but what you can get away from this is that if price goes up, buyers are controlling the market. If price goes down, the sellers are trying to control the market. But if you break a high, okay, break above high, there is trapped sellers in the last down move before we broke structure to the upside. So once you have the chance to see price pulling back down, if we are truly bullish, those sellers will cover their position, and if you sold in the first place and you want to get out of your position, you're going to click on buy. That's how market works. So if buyers are willing to defend their position inside this order block, and even sellers are buying here to get out of the position, what is going to happen? Everyone's going to be buying at the same time, so price is going to go up. That's the concept of covering and understanding market structure. Same thing happens on a breaker, on an IFVG, etc., etc. It's deeper than just, okay, it's a breaker structure. let me use, you know, the market auction theory so you can understand those concepts at a deeper level. Okay, these guys are whales, like they move the market. If you are in a drawdown, they could easily pump the price back down. So this is why sometimes you see sharp moves down and then, you know, price goes back, but holds the order block perfectly. It sweeps this low, wicks this low, because they initiated the move here. That's the same, like, okay, so basically, order block is just a break of structure to the upside or to the downside. Good? Okay, that's really important. So either price creates a low, high, lower low, or high, low, higher high. Good. That's the only thing you need to know. And then second thing is that if we are truly bullish, we should respect the last down move before the break of structure to create a new high. Same thing for the bearish. You should respect the last up move before the break of structure if we're truly bearish to create a new low. That's it. Don't complicate stuff. All right. Hopefully it helped. It's a little bit more complicated than what people show, but yeah. Did the explanation help you a little bit, or was it too deep to a point where it fucked you up a little bit? It was deep, you know. People that, you know, knew about the order block will potentially appreciate what I said, but if you didn't know and you still don't get it, then uh you're even more lost. Good question. So okay, so we talked about order blocks. All right, order blocks is just high, low, higher, high. Okay, that's a bullish order block. So we know this zone should hold in order to create a new high. But what's happening if we have a breaker, all right, it's a failed order block. So this order block, instead of holding to create a new high, what it will do is that it will fail and break below the low. So then this bullish order block got disrespected, which turns the speedy rate into a bearish breaker. And now you want to take the shorts back here to create a new low. So it's a failed order block. I don't see a lot of people explaining it that way, to be honest. They really complicate stuff. But I think the best way to explain those concepts is through market auction theory. Because when you think about price going up because of buying pressure, you're like, all right, okay, now I can see my buyers here. Now I can see my sellers here. Now I can see the cover, you know. But this is a concept that I like. All this explanation are concepts that I learned when I was trading order flow. And, you know, I think like when I was going through order flow and I dropped it, I was like, damn, this is possibly the worst thing I've ever done in my life. But the understanding of the market structure was just insane. So I'm really grateful for that, for sure. Thank you, Amos, but please explain it on a candle chart. All right, an order block is this. Break of structure, so you have, let's say, right now, okay, you have a low and a high. Perfect. You create a low, high, lower low. Perfect. And now this candle is pushing up. If you can close below this low, right here, you have a bearish order block right here. So you see here, closed below, this right here is a bearish order block. This zone should hold in order to create a new low. See? So let's say like in this case, right, same thing is happening. So we have price going down, and the last down move before that break of structure was right here. So this is still my bearish order block. But if I want to play longs, I want to see this bearish order block get disrespected so I can use this zone as my area of support to create a new high. But imagine if you paired this plus your order block, plus the timing, plus the power of 3, plus the fair value gap, the chances are you will break the most recent high for a 1-to-1 risk to reward. That's what I do. So here we have this bearish order block. For me to look for longs, I would need this order block to get disrespected. Definitely. Like, I'm looking for that actively right now. It's simple. Awesome. Thanks, man. And would you consider taking trades when BB holds, wait for confirmation, or just take trades on BB? Understand the breaker block on a deeper level and order blocks on a deeper level. Understand why this order block will hold because of time. It's when you align price and time that you understand when an order block holds or when a breaker holds. If you just align price, there's a missing concept, a missing piece in your analysis. 100%. Simple OB. Wait. Just gonna look. I saw the models in your Discord. Thank you. Going to backtest them. If you don't mind, can you give a checklist rules for entry under the models? I did. I definitely did. But I'll take a look at those after the stream and see if the checklist was good enough on some models. I think, I think model 3 or 2 didn't have like that good of a checklist, but the first model did. But I'll take a look at that and make it a little bit better for you for sure. All right, if it can help you. Simple OB explanation: an order block is a microstructural liquidity nexus formed by institutional order clustering, encoding latent supply demand. Right, those words are out of my out of my reach. But yeah, just understand that an order block is a breaker structure, and if you're truly bullish, you should hold, or if you're truly bearish, you should hold. Appreciate you for teaching us. You're welcome, bro. That's you're welcome. In my opinion, breakers are stronger confirmation. Yeah, exactly. For me, breakers are better than order blocks because they give you more context and you have more trap participants than an order block. So here, let's say in this case, all right, you see this, all right? We had this bearish order block. So what happened was that we had a low, high, lower low. And then here on the structure that was, pulling up towards this bearish order block, we had the sellers defending their position right here, boom, and then we create a new high back towards this order block. Okay, so what happened was that we created a bullish order block in an area where sellers were still active. Okay, we didn't yet disrespect that level. So now it's a 50-50 to take the longs here to create a new high. Why? Because you could still hold this, but what you can do is wait for this order block to get disrespected, so this bullish order block to get disrespected, so you create a breaker, and then all right, I just respected a bearish PD area, which was my order block, bearish order block, and then I disrespected also that bullish order block, creating that breaker. Now I have a good short back to the low. That could be your play. But like, let's say in this case, like you don't necessarily use the timing aspect, but still, good way to look at it. Also, you had an inverse, and yeah. What's your X? It's Sten for PF. STEN for PF. But I'll change my ad. I never changed my ad on Twitter though. I need to ASAP. But you see here, I like this. Right here, I like this. Why? Because we just created a bearish fair value gap. I know there's displacement. We displaced super hard into this zone. If we displaced hard into this zone, what does that mean? It means that there is a lot of orders right here. If you displace through a zone, it means that there was not a big exchange between buyers and sellers at this price. It means that the sellers were the one controlling the market aggressively, which means that there's a low volume traded inside this zone. If there's a low volume, then price is attracted to those low volumes to fill them. And what is low volume? A lot of people are putting limit orders right here to get filled to defend their position. So for me, how do I see this? Let's say I would want to see this, fair value gap be created, okay, and us finding signs of weakness at those lows in order to trade back towards this gap. So that would be, the play. It's a magnet for you. Let's say, how do I see price? I see price, holding levels to draw back towards internal gaps or to sweep internal lows. So this for me is a magnet. What time is it? It's 2:30. Damn. Can I find a trade, guys? Yeah, it's been 2 days in a row that I didn't find any trades, guys. It's pretty disturbing. But yeah, I'm filming small vlogs. By the way, I'm gonna put a nice video on YouTube. But I'm filming nice vlogs, of behind the scenes of what I'm thinking and how I'm managing my accounts, etc. But you will like it for sure. I'm not gonna post it right now, but yeah, I think the series on Twitter that are really nice is not necessarily to see people, showing their success, but see the grind. The grind is really what is nice to look at. So I'll definitely update you on that for sure. On the behind the scenes and what do I actually do in my life, or how do I actually feel after a losing day or a winning day, or what I'm currently dealing with right now. You don't trade the AM? Yes, I trade the AM for sure, but there was just no trades for me. Fortunate. You see, like even right here, just as a framework overall, guys, why do I think it's really good to scalp internal gaps? It's because you see here, right, price created a 15-minute bullish fair value gap, okay, after sweeping that buy side. Perfect. So you see that you can see that right here there is a low volume traded. Price will be attracted to this zone, okay, to have enough fuel to create a new high. This is where buyers are located. This is where buyers are. So you want to trade back towards this gap. You don't even need to predict that price will hold this gap in order to create a new high. You can just trade back towards this gap for a quick scalp. So here, let's say if you go on the lower time frames, I didn't trade that, right? Because my model is not necessarily those simple confirmation. It's a little bit deeper than that. But you see here, we created a nice inversion for value gap right here back towards the gap. So it is a good play, a good stab in my opinion to catch this, especially since it was a 15-minute power of 3. You see, we swept the previous candle's high here, open high, flip below the open, inverse, you caught the upwick of a 15-minute cycle of a candle that will most likely close bearish and take, this internal fair value gap. That's deeper analysis, that's deeper thinking than just, all right, I'm gonna wait for an SMT at the bottom of the range, market structure shift, and I'm gonna enter. In my true honest opinion, if you're still doing this, it's gonna be a long ride. It's gonna be hard. The 1 minute chart, if you try to play bottom of ranges, let's say like you just wait for confirmations without having a super strong draw, a super strong reason on why price would go back towards a certain area, and you just swing. Let's say what people do usually is that they will mark out their London lows, Asian lows, previous daily lows. They will wait for price to sweep this SMT divergence with ES, market structure shift, and then they will take the long, and then they will have first TP here, second TP here, third TP here. What I can say about this is that this, in my opinion, doesn't have any edge because of the RR. You're positioning yourself in those kind of scenarios, trying to catch the bottoms without having a understanding of where price is actually going to go, is actually willing to go on the higher time frame. You will not be able to pattern trade the 1 minute without any narrative behind it. It's impossible. So like 99.9% of people that are trading this model, let's say the sweep of sell side SMT divergence, market structure shift, just blindly off of, time-based liquidity, it's just my opinion. It's my opinion because I did the work on that and I didn't find any success. Okay, possibly because you need to use discretion in those kind of systems to perform. Mechanically speaking, you taking the trades with the same size every single day, it doesn't work. That's why I talk about narrative. Scalping internal gaps is 20 times better than that. You have a reason on why price should go now, right now, back down. Not just because of sell side sweep. Every time you break above a high, it's a buy side sweep, or every time you break below a low, it's a sell side sweep. It's too subjective to take a trade. So you need more. You need deeper stuff to get into a trade, in my opinion. But because I did it, and I was lost. I was lost doing that. When you are trading the fair value gap projection strategy, if price made several IFVGs, you are not trading. But what if price goes back and makes another leg, and then there is only one IFVG? Is it valid? If it starts digging into the gap, like I said, you need to pair it with a 15-minute power of 3. If it starts digging, creating new lows like this, boom, into this gap, say, now you need to wait for a 15-minute candle to close, sweep the low, IFVG, and then you take it. Because you are early in a move that can end up being a 15-minute bullish distribution. So you see here, we created an internal gap on this 15-minute chart. We know there's a lot of sellers right here. A low volume being traded right there. If you can find signs of weakness right here, this draw is way stronger than having random TPs at highs, because there's buy stops here. So do I want to scalp this? Of course. I am definitely willing to trade this move back towards this high. I will try it, and if I don't have the right confirmations on that, I'll just do the giveaway and we're gonna wrap this up, but not now. I'll take a look at the trade if we can have it, but it's getting pretty late and I don't want to give back any money that I made this week, especially this late into the PM session. Can you explain the power of 3 if you don't mind? I have a whole video. I'm gonna explain it, but I have a whole video explaining it, and it's called open high low close, open low high close, power of 3. And basically, what is the power of 3 is that a bullish candle usually creates its low first before finishing by creating its eye. Okay, so let's say here, usually what a candle will do is that it will open right here. So this is the open, low, high, and close. And what usually happens is that when we open, we accumulate, then we manipulate, then we flip above the open, hold, push up, and then we close. So if you can understand when to time, okay, the open, high, low, and close, and if you have a key level that is strong enough for you to predict that one singular candle on the higher time frame will close bullish, then by understanding the mechanics behind when those lows get put in, you can position yourself in good situations. That's basically what the power of 3 is. It's understanding that if you have a strong enough key level, if you have a strong enough framework to know that price is going to push up or push down, then if you know how a candle works and what are the statistics of those bullish candles creating the low first, then you can position yourself in a way that you're not blind. That's also a part of the timing. Why the power of three is so good is because of the timing. You're trading candle openings and candle closures, so you're not exactly like in this case. Let's say like the new candle opened, drop back down towards the gap, because why? You need this candle to close right here, okay, before this gap gets created, so the move is going to be made at a certain timing. You know what I mean? Like this gap gets created as soon as this 15-minute candle closes. So if you want to see price move down, then you don't want to take the first IFVG here inside this bullish candle. You want to wait for the new candle to open. Cam is like hiding it. You see, like right now it's pushing up. I like that. Damn, this is not. That's pretty much the volume. 23, not that bad. You can request payouts after 7 trading days. So basically, like almost, since there's 20 trading days, you can request payouts. 21, so almost 3 times a month. I just need to focus a little bit here because I could be taking this potential setup back towards this gap, but after that I'll respond to the questions. But we have this 5-minute gap that we will potentially inverse. Didn't get picked on that, unfortunately, but yeah, that would have been a good setup, but didn't get picked. I see us trade back towards this internal gap for sure, I know. As the timing is, yeah, it was choppy. Like, I wanted to see a deeper open low back towards the breaker. But really towards this order block, the body of this order block, this is what I wanted to see right here. This is the entry that I wanted to take here. But yeah. Looks like I can't find any fucking trades. Let me just make sure everything is I'm out of everything, and then all right. So yeah, I wanted to take a trade here back towards the gap, but couldn't find anything um, off of the timing that I wanted to have basically. But yeah, it will definitely go towards the gap. It's just I have specific areas where I want to enter. But now you see like how good these levels are for targets, you know, which is the most important thing really, is to understand why you would take a trade back towards this high and why would this breaker hold more than another is because you have a gap here ready to get filled. So that's basically like scalping wise, it's way better. If it gets back down, this is the thing, like if it starts pushing and creating bullish order blocks, I don't want to enter too deep into this premium because I know it can pull back down. But yeah, so for me, let's say when I wanted to enter this trade, it didn't fill me, and then it pushed higher than what I wanted to enter on. So I'm gonna stay cash. But that's definitely the reason why I took this play. Unfilled gap above me, you know, OB market structure shift gap. You see now the target gets hit. But yeah, hopefully this session helped you with me understanding why why this makes more sense than just pattern trading, sell side liquidity sweep S&Ts and market structure shifts. All right. So I'll do the giveaway, guys. We'll do how many legs do we have? 130. Holy damn. We're gonna do a growth account, 50K growth account. All right. 50K growth account. Let me just log into this. All right. So what we're gonna do is this, and that. So now giveaway, guys. Giveaway time. All right. So make sure to like this live and subscribe to my channel. If you don't subscribe to my channel, then you're not gonna be entering the giveaway. So here we go. All right, the word will be, do you guys have a good word? Tell me a good word in the chat that I can I was gonna enter 6 minis, by the way. We're gonna say What's the word? What? No, so the word will be, yeah, the word will be, yeah, growth. Growth. Everyone spam growth right now. So spam growth. You need to be subscribed to my channel and like this live to enter. But the word is growth, so spam growth. I'm gonna give away a 50K growth account on Tradeify. 100%. So lock in, guys. Let go. The spam growth. Bruh. Why do I... Okay, now okay. It lagged a little bit. It had like 0 people. So we're 109, 152 likes, man. Appreciate y'all so much for the love. That's insane. We're growing and growing. After that, I'm gonna show you guys my P&L for the month, what I'm currently up. If it can inspire some of you, or if you guys have any questions on that, for sure. So we're 104, and I'm gonna start it in 10 seconds. All right, 10 seconds, and we're starting that. Lock in, gang. Come on. 116, we're 115. Aceptar. Come on. Mikey. Good job, Mikey. Type in the chat right now, Mikey. You have 55 seconds to type in the chat. You can see right here, you have 55, like 50 seconds right now to type in the chat. Good job. If I see you type in the chat, it will, you need to type in the chat. You have 35 seconds, my brother. Come on. Did Mikey win? I don't think he won. I would have remembered his name. Mikey. Finally. Tell him the strat, Mikey. What did you do in order to win this account? Did you pray? What did you do, bro? Well, good job, Mikey. Make sure you have your email in your YouTube description. All right, that's the only way for me to give you this account. It's by email. All right, and if you want a giveaway and I didn't send you the account, it's because you don't have your email in your YouTube description. Okay, I tried everything, but I think there's only one guy that didn't receive his account. All the other ones received, but yeah, or you know, yeah. So good job, good job if you took that trade for sure. I didn't get the entry that I wanted. Such a small pullback, then price ran without me. So unfortunate, but yeah, that was the trade that I was framing, and the reason why I thought that sell side, that breaker, that order block, that fair value gap had way more chances of hitting the draw and hitting an internal gap, because there was orders right here ready to get filled. Just look, go back in backtesting and just look at how many gaps that as soon as they get created, we fill them. I can go take a look at any days and you will see, you see right here, even we create a 15-minute gap. What happens right after? We fill it. Signs of weakness right here to fill back the gap. Right here, what happens? We create a bearish gap. What happens right after? We fill it. So there is a scalp here. What happens right here? You see? We create a gap. GG's. Alright, we create a gap here, you see? 15-minute gap. What happens right after? Oh my god, guys, I'm literally so fucking dumb, but let's not even talk about it, alright? But you just go back into every day and take a look at how many times do we create a gap and fill it, and that is your draw. So let's say here in this case, I just gave y'all like 3-4 scenarios and you couldn't see the screen, but yeah, so here you form the gap, the bearish one here. This is high probability to get hit, right? But my fault. But the gaps, internal gaps, are really good, strong, areas to find scalps. You see here, again, create a gap, sell towards the gap. You see here, created the gap, can't close above the previous candle's high. What do you think is gonna happen? And what do you think is here? Possibly an inverse. So if I go here on the 2, possibly, yeah, there was an inverse. So now possibly like a really good 3, but you see here you sell back towards the gap. This is a quick scalp though. But what is the gap here? It's here. It gets filled. So that's the most important thing. That's the piece of the pie that you wanna scalp. So that's basically it, guys. I appreciate y'all so much for the love, and being here when I stream, not just for the giveaways. Appreciate y'all so much. And if you guys ask me questions and ask like really good questions about anything, like technical psychology, it's my perspective, it's my way to read price, it's my way to think about trading. But you can definitely learn things from me or things from anyone in this community. So appreciate y'all for showing me some love and being there till the end. 100 people is crazy, so appreciate y'all. Now let me just go over my journal. Put X here. Let me just go over my journal real quick. What time is that? 15. Wait, that's not bad. That's not a bad trade, guys. Yeah. Well, I will see, but this candle pushes up though. Yeah, I don't think we're gonna get it though. But I'm just gonna go over my journal right now, my on Tradeify, and I will just wrap it up with this. So here we go. Let me just go here. Oh shit. This is not what I wanted to. It's not what I wanted to show. Right here. So these are my current stats right now on my accounts. Let me just go here. If I go there, top right, you guys will be able to see FTD, right? Active, straight to funded accounts. Net P&L right now on those accounts, 32,000. Wasn't, always bullish. Like it wasn't always green P&L, right? It went down sometimes, went up, went down pretty aggressively sometimes, but still keeping the same exact system, keeping things slow and steady. So this is my month of July right here, as you guys see, and right here this is my month of August right now. So I said I didn't take any trades yesterday. I took one trade on Tradeify TV and ended up being a break even. Then yeah, that's literally it. But didn't take a trade yesterday, like a real full-size trade. Didn't take a trade today. So we'll take a look at what we can take in on Friday, possibly. Well, I'm gonna do a live tomorrow for sure, but we'll see what we can take on Friday. And yeah, and it will take as much time as the market wants to give me that payout, but decently up on those accounts. Traded the same exact system every single time, same approach, same risk. Had just followed my game plan, And I had harder days here. Not gonna lie, there was some days that were hard and I really wanted to tilt, but in those days I didn't. And which I thank myself for not tilting. You can feel it. We're humans. You will feel the need to tilt, and you will feel like the word, like you will feel like it's your last day on earth, literally. Like if you don't get your money back right now, you will not be able to accept it. But if you can accept it, there will be so many good potential winners that are waiting for you on the next week, on the next month. So that's basically it, guys. Appreciate y'all again so much for showing up to the streams. And yeah, so I see you guys tomorrow at 1 p.m. EST again for a live stream. I will give away again accounts like every stream, and hopefully I'll find a setup. But as you guys see on my journal, I didn't take anything today. So appreciate you guys so much. If you guys want to use a prop firm, make sure you guys use Tradeify, by far the best prop firm. Use code AMOS for the highest discount. This is what funds those giveaways and those streams.